Welcome back. It's time now to take a look at the top business stories. Mubadala Development takes over ATIC. UAE regulator expresses support for merger of ADX and DFM. And we take a look at competition within the advertising industry. The UAE's financial markets are closed today due to Al-Mawlid Al-Nabawi, Prophet Muhammad's birthday. Trading will resume on Sunday. Let's now take a look at various currencies exchanged into dirhams, followed by the price of oil and a selection of commodities. To talk about the markets this week, we're now joined by financial analyst Bruce Powers. Welcome to the show, Bruce.
Thank you.
How are you today?
Good.
The UAE stock markets are closed today due to the public holiday. Yesterday, we saw stocks tumble quite a bit. Profit-taking ahead of the long weekend, or what's behind all this?
Well, I think partly it's that. There's also some growing concern about the protests that are happening in Bahrain. It's very normal to have more caution before going into a long weekend. So Bahrain adds a little bit more uncertainty for this long holiday weekend. We have seen very strong rallies in both Dubai and Abu Dhabi over the past few weeks, so it's very natural to see some profit-taking and a bit of pullback, which I think will probably continue into the beginning of next week.
We saw stocks in the U.S. rally quite a bit. The S&P 500 reached a 32-month high. Housing starts in January climbed 15%, much more than analysts expected. Is the housing market in the U.S. out of the woods? What do you think?
Well, the inventory of new homes right now is the lowest since 1968, about 190,000. So I think this pop is partly due to that. I think developers are looking at demand that is not being filled. Now, this is definitely a positive report, but I think the housing market still has a way to go to recovery. If we look at unemployment, it's improved a bit. It's down to 9% now. But in order to support a housing recovery, we have to have an improvement in employment. And right now, the housing market in the U.S. is significantly impacted by many distressed properties.
Let's talk about food prices. According to the United Nations, food prices have reached a very dangerous level, threatening tens of millions of poor people. What do you think? Where have we seen the strongest gains in food prices, and where is the most to come yet?
Well, if we look at the three main food commodities, which are wheat, corn, and soybeans, wheat and corn have both rallied over 100% over the last 7 months. And soybeans are up over 50% over the last 7 months. Now, the thing to keep in mind when everybody's talking about something, many times that's a sign that we're getting close to a possible correction, which I think we could see in the relatively near future in some of the major food commodities. However, the long-term trend is still up, and we're likely to see higher prices at some point in the future.
Thanks for coming in, Bruce. Have a good weekend.
Thank you.
And now to our top stories. Mubadala Development has taken over ownership of the Abu Dhabi government's advanced technology investment company. Officials hope once ATIC is under the wing of Mubadala, this will help the company finance a high-tech manufacturing center near the Abu Dhabi International Airport. Reason being that Mubadala is rated by credit agencies and has a track record of selling bonds for companies it owns. This raises international investors' trust in the company and therefore makes financing cheaper than if ATIC would look for financing on its own. The CEO of financial regulator, the Securities and Commodities Authority, has expressed his support surrounding the merger of the Abu Dhabi and Dubai stock markets. Abdullah Al-Turaifi said officials from both bourses had been meeting up regularly to discuss the merger. As both sides have different strategies and ideas, the authority was waiting to receive their responses and said they will look to support their requirements, should it benefit the UAE's financial market. Meanwhile, the UAE's Minister of Economy said new regulations and changes are on the way for local stock markets, surrounding short selling, securities, lending and borrowing, and derivatives to boost liquidity. Etisalat's Chief International Investment Officer, Jamal Al-Jawam, is more confident than ever that the telecom company's $12 billion offer for Zain will go ahead. Speaking to Reuters, he said he sees a 60% chance of success. The takeover will in fact go through, and that it would add up to 8 countries to Etisalat's portfolio. It is looking to buy a 46% controlling stake in Kuwaiti Telecom's operator Zain. The due diligence results are to be presented by the end of March. Jamal Al-Jawam also stated that financing was fully underwritten and would not be a hurdle. And in our fast financial news, Dubai's Al Ghurair city is on course to deliver its 2 billion dirham expansion by the end of the year. The wing extension will include 150 retail outlets and increase the size of the Deira-based mall by 12,000 square meters. Master developer Nakil says the response to elections of interim owners associations board members within its developments have been poor. The Dubai-based company is processing registration requirements of around 290 IOAs in line with the real estate regulatory agency. And in our international business news, BNP Paribas posted a 14% rise in net profit for the fourth quarter, fueled by higher revenue at its investment bank and a rebound in its U.S. consumer unit. Fourth quarter net income of Europe's largest bank came in at 1.6 billion euros. Group revenues rose 2.6% in the quarter to 10.3 billion. Despite the gains, BNP Paribas missed analyst expectations after it booked a 534 million euro charge on the value of its stake in insurer AXA. The bank blamed the surprise one-off charge on the, quote, highly volatile post-crisis stock markets that had taken AXA shares below their book value. BNP currently owns just over 5% of AXA. Borders, the American bookseller, filed for bankruptcy and said it will close 1/3 of its bookstores. 6,000 jobs will be at stake. Borders has fallen on tough times as physical book sales have been dented due to more and more people preferring to read digital books. And looking at Asia, the Australian Stock Exchange posted a small 3% rise in first-half profits, but attention remains on the completion of the $7.9 billion bid from Singapore's exchange. The ASX SGX deal still requires approval from the Australian government's Foreign Investment Review Board. Should the board give the go-ahead, the deal will then be sent to both houses of Parliament to clear a 15% cap on foreign ownership of the ASX. The CEO, Robert Elstone, reminded governments that they should remember markets now demand seamless global trading. Both companies want to team up to cut costs and tackle growing pressure from alternative trading platforms. Shares of Qantas Airways posted their biggest one-day gain in almost 2 years, rising 5.4% after the Australian national carrier reported a 4-fold jump in first-half profits. They came in at 241 million Australian dollars compared to just 58 million a year ago. The airline signaled a return to growth after the worst downturn in aviation history. This is due to recovery in corporate travel and higher ticket prices, which offset soaring fuel prices and the cost of grounding Qantas' fleet of A380 aircrafts. And in Japan, Honda Motors Company shares jumped over 2%, with the company expected to buy back more of its shares. Honda's current payout ratio, including dividends, is around 23% and could rise to up to 30%. Deutsche Bank Securities said in a research report that Honda would need to spend 30 to 35 billion yen to reach its targeted payout ratio this year. And after the break, we find out about the competitive world of advertising.